I was shocked at the industry that we can pay investors out of funds that we raised as distributions and call them returns. I personally covered the expenses of the assets. It cost us right around $3 million out of our bank account. You don't want your LPs to have a different view of the situation than you do, no matter what the situation is.
The views expressed in this podcast are those of the individual guests and do not reflect the opinions or recommendations of Invest Clearly. This podcast is for informational purposes only and should not be considered investment advice. The appearance of a sponsor or investor on this show does not constitute an endorsement or a warning. Invest Clearly is an objective and neutral platform. Always do your own due diligence before making any investment decisions.
All right, AJ, thanks so much for joining me.
Thanks for having me on. Appreciate it.
Yeah, I've been looking forward to this. I know many of the people listening, the people who use our site probably know who you are. But for those that don't know, can you tell us a little bit about yourself? Just give us an intro to you, self-storage income, Cedar Creek, and that'd be great.
Yeah, so I'm a self-storage guy. That's like all I do, total self-storage nerd. And I have been in this industry for 20 plus years now. We were in it in the early 2000s. So we started it prior to 2008 and I love it. And we built the business around, we started out simply, my approach was, this is a business. This is not a real estate asset. And with that approach, we would buy underperforming assets and turn them around with a focus on operations technology. And that worked really, really well. And that's kind of how I became known, especially in the industry. I started speaking and I wrote the industry's best-selling book, which was Turning a Real Estate into a Thriving Business. And so it was all around changing the way you went about storage. And that took hold and really became a new format, which everyone adopt today. In fact, if you don't really adopt that, you can't compete. So we're actually at a new level within the industry. The industry, prior to 2008 was not ignored is an understatement. We're talking less than 10% of the industry was REITs or institutionalized. It was purely a mom and pop, banks didn't like it. It really came out of the, shadows after 2008 and really got popular after 2016 and became what it is today in a very short period of time. So it's fascinating for me as having watched this industry change. But we do everything storage. We're a vertically integrated shop. We pour millions into the business of storage, just not buying the assets. And so I'm talking technology. We own our tech stack, multiple tech companies. We own and build our own revenue management operating system utilizing mass data. We have architects in-house. We have construction management in-house. We do property management. We wanted it to be centrally integrated, just like the REITs. And what really changed the game when particularly Extra Space started leading that way. So we're nerds about it and love it.
That's awesome. Yeah, I want to dig in a little bit more to the education side and when we get further down, because I'm curious about how you balance the education and the real estate side of the business. But you talk a lot about building businesses and portfolios that last for you. And again, this podcast is mainly about like trust, transparency, and how GPs are communicating with their LPs. Where does trust with investors begin for you?
That's an amazing question. So I think when looking at LPs, trust begins before you ever meet them, right? Trust is about who you are more than anything. And that's long before an LP ever shows up. And so for us, I focused very heavily just on, we are not a fly-by-night company. We've been doing this since 2004. We're not new to this. We're not going away. We're not, we have consistency. We have a steady track record. And for us, we risk our money, meaning that before I ever took an investor's money, ever, it was all our own money. So we built every single one of our companies off our own money. Our whole portfolio, originally 150 million in assets, came from just us, just me and my two partners. That's it, nothing else. We took no investors. So we did not take investors until we had already put all our money at risk and learned off us and what we're doing. And so for us, that has always been a theme where investors became an opportunity to come what I call ride along. They're right along. So we don't use them as a vehicle to necessarily make us because we already had it. They are allowed to come right along on the side with us as like partners, just right beside us. Our entire net worth that we have created over 2 decades from ourselves, our own actions, everything are tied into this. It's our risk, our money, our businesses. I pay the expenses. And that's a really, really important piece for us. It starts with us and it ends with us. And our businesses are structured literally that way. So I think when you look at trust with the LP, there's a lot of things you can make mistakes and will make mistakes because holy cow, have I made so many, right?
Right.
But the one thing that stands behind short term market changes, mistakes that you make is your history, how you got there, and where you will be. And that's the most important thing to me. It's just transparency, but it's transparency throughout the entire journey of who we are, what we stand for, and where we're going. And we don't, and will never promise returns. We'll never promise that we won't make mistakes, but we do promise that we will be the first. It'll be our money at risk, and that we are promising the opportunity to participate in what changed my life, saved me and my family, and that's a big deal to us. So the reasons why GPs take money is really important. How they take money is really important. Their history, all of those things build trust. It's not a simple art, how even necessarily you're presenting. I think it's just much deeper than that and really gets to the core of who you are and what you're doing and why you're doing it.
Yeah, so I was gonna follow that question up with like what's important to establish early in the relationship, but I think you kind of answered it. It sounds like if I was to sum it up, you're kind of saying like skin in the game. Like we have skin in the game. It's our money at risk. Like we're not, like you said, the investors aren't like a vehicle for you. Like you're the
Yeah.
vehicle for them.
Yes. Bingo. That's exactly right. That is our relationship. And that was a hard decision even too for us to make because we had no need to take investors, right? We had a $150 million portfolio. We on our own, our whole business, all our employees, we had our tech companies. We didn't need that as a vehicle. It literally only came about because I became paralyzed from head to toe. And when I was in the hospital, I was on life support for months. And when I was coming out, I simply made a promise that I would teach and share opportunities with others because I'd never once really, I've never done, previously, I'd never done a podcast, never done anything
Okay.
online, nothing. And we'd never allowed investors. And the reason why we didn't allow investors was due to us. We were, first of all, scared of losing investors' money. I was terrified of that, right? I'm okay losing my money, but not other people's. And then second, to be honest, it was selfish reasons.
Yeah.
And the change came from, so the why we take investors' money is very specific. And there's a driving reason behind it. And that is not to make a quick buck or to use it so we can not take investors and like do our own thing. It was actually inverted.
Yeah, that's it's interesting how you like came to that. And I do want to ask you some questions about how that experience changed the way you communicate with people in a bit. But first, you mentioned mistakes. I think like mistakes are an interesting thing when I'm talking to GPs that even yesterday I was having a conversation where we're kind of trended towards like, okay, I've got this thing I need to communicate to people. Is there a way I should be positioning it? And so a lot of operators are in the place right now where they're adjusting projections, extending hold
Absolutely.
periods, dealing with interest rate pressure. Like
Yep.
how do you,
Capital calls, like
yeah,
it's been rough for the last 3 years and it continues to be.
right. So obviously that's like part of the risk when you go into an investment. How do
Yeah.
you approach those conversations when things change?
So I've done this in so many ways, that were bad. So when I look at my original communication style, I communicated to them as if they were just partners. And what I mean by that is I communicated asset base, and that was wrong. So when I looked at it, I brought my operating model and I was like, just purely, oh, it was a pure ride along. Like you're just going to come along. That was not the appropriate way to handle it for a few reasons. But particularly the fact that the investors, they're investing in an investment vehicle and they are looking to understand returns, timeframes in a very different manner than I had ever done. And so I communicated purely on the asset basis. The asset's making this much money. Here's the changes we're going to do. This is what the asset will do. Instead of communicating a lot to the investor, here's where your money is. Here's what's happening. Here's what that will result in. Because I just simply had never done that before. Right. And so I had only ever looked like it was just my personal money buying. And, that was wrong. And I had to learn that through communication style. And that was difficult because I was trying to understand something I had never done and been a part of. Now, when we make mistakes, you think that this is a really simple thing. It turns out it's not. And one of the main reasons it's not simple is due to what the investors need, want, and should be hearing,
Right.
right? So there's one way to do it where it's just like, and how I was, I'm like, all right, here's what's going on. Here's the problem. I got this problem child here. And then I'm diving into everything about the asset because I want to be transparent.
Right.
That was horrible,
Mhm.
horrible. Because it's like I was assuming that they had the experience and knowledge base that I did. And so I was getting into complexities, thinking that I was being really good because I was being wildly transparent. I was opening up maps and I was showing this is what we're going to try to do next quarter. Don't do that. Like,
Yeah.
I think I confused and scared a lot of investors. I was so overly transparent that it wasn't focused, and I don't think that looks good at all. And then I was sharing things that were execution type things that if you didn't have context, it didn't mean anything. It meant something to me. So when I look at problems and as we rearrange expectations, it's not even what you're going to do about it is really, really important. But it needs to be very, very simple. It needs to be moderated. And you need to talk to investors differently. So when we have a mistake, or let's not even a mistake, let's just say we're reframing future expectations. The market's totally different. This asset won't perform like anybody had underwritten it or anything. So we have to reframe expectations moving forward. You need to be very simple and clear. This is the problem. This is the outlook. Here's what we know and what we don't. And here's what we're going to do. Simple, concise, consolidated, and deliver it. It is about clarity in a way that is digestible.
Right.
So there is this idea that you need to be totally transparent, which I completely agree with. Any investor asks us anything, we're like, here's the reports. For a long time, we were giving all the reports, all the financial statements, like monthly. It was just like, here, quarterly. That caused a lot of confusion. So
Right.
I think that when you make a mistake or when you have to transfer, because everybody will. So especially if you're a new GP listening to this, if you haven't been in this game for a long time or whatnot, that you will make mistakes, and investors understand that. And I think that for the vast majority of investors, not only do they understand that, they are fine with it if you're upfront that you take care of it and take responsibility of it, and then you shouldn't have any problems. But you need to be concise, consistent, and you need to update them as it's happening. So if something changes, update them and focus it so it's clear. I've made so many mistakes with that. It's a constant evolving thing because how you communicate changes. It's very different if you make a mistake in an up market where interest rates are going down, occupancy and everything,
Right.
versus if you make a mistake and you're in a down or a plateaued market, and the effects of that will have it has different types of consequences. And so I think that it's this balancing act of being clear, extraordinarily transparent, but also concise and useful information that the investors need and care about.
Right. Yeah, I think indirect, I think would be the other one, right? So it's
Very direct.
yeah, I think
Just it is what it is. Say it.
right. Exactly. I think sometimes there's so like one of the things I've been talking with people about is like there's the complexity of like, are you communicating too much or are you communicating too little? Like you don't want
Yes.
someone to know every little problem that's happening in a facility because they just don't know how to like they don't have a bucket for that.
They
They don't
don't
have
know
a
what that
bucket.
means in a result.
Yeah, they
So
don't, they don't know what impacts the result. So like part of the reason they're working for you is to net that out for them.
yeah,
But that's
exactly.
yeah. So I think you're right. And what we see coming through in the reviews is, like timeliness of communication, like how proactive the communication is,
Yep.
especially when things are, maybe going, not to plan. That gives people confidence that they're dealing with a thoughtful operator who like,
Another thing too that I had an issue with is I'm like, if we don't have an answer, what what are we doing telling? We need to figure out an answer and then tell investors, right? So I'm like, let's figure out the answer to this issue or problem. I I don't agree with that anymore in that mode. It's you need to state, here's the issue, we're working on it, we'll follow
right,
up, right?
yeah,
So because I'm like, the investors want answers. And I'm like, yes, they do want answers, but they also need to know the issue, what you're doing to work on it. And it's okay to say, I don't know. I
well,
do not know, and I'm trying to figure this out, and here's what we're doing to figure it out. We will give you an answer at this time. So
totally. And I
it's
think
concise.
the last thing you want is them finding out that there's a problem that you knew about that you
And
didn't
didn't
tell them
tell.
because you didn't have an answer.
Never want
Right.
that, ever.
Right.
And
Because then it looks
especially in
like, yeah,
markets where it is today, a lot of operators feel that pressure because where markets are, they don't know where it's going to go. And that weight can be really heavy on an operator that feels responsible for their investors. Their investors want to know, okay, well, here's what we're going to do. Well, what's the result? And or what's the market going to be? And will we have these options where they don't know? We don't know if interest rates are going to go up, if interest rates are going to go down. We don't know. And so I feel like a lot of operators can feel that weight and that starts to seize up, especially when there's problems or things that need to get done, because they're going, we're doing this in anticipation and we need markets to change because there's certain things that are in your control and outside of your control. And I think that's what you have to be clear about. Here's the issue. Here's what we're doing. Here's what's in our control and what we're doing to fix it. Here's what's not in our control and what we're doing to hedge or to position ourselves better in case something doesn't go as planned. Investors understand that there are things that are not within your control.
yeah, without a doubt. I think that is an important thing for most GPs to remember is that most GPs are used to succeeding, right? That's why they got into the business. Like
That's
their
why they're in the
purpose.
business.
And so like those, when things start going sideways a little bit, they feel an incredible weight and they should, right? You're dealing with investor
Should.
capital.
Absolutely.
Those, you can't let those kind of like, those feelings kind of grow and prevent you from communicating. So I want to circle back to what you were talking about earlier. Obviously, you've been incredibly open about your story, just in terms of what led you down this path and your health battle and recovery. Has that shaped how you? Obviously, it shaped your ability to accept investors and like start going out educating, but how you show up and communicate with investors.
Absolutely. So, first of all, the one thing that after it happened was humility on a level that's hard to describe. Nothing humbles you more than when you are hooked to machines, lying naked in a bed for months, and have to be scrubbed with rags and can't communicate because you're on life support, and then can't walk and have to have literally everything be done for you, feed you, everything else. So after coming out of that, it was just like, I don't have anything else to lose. There's nothing else. And I was so overwhelmed with gratitude from the help that I received. So, first, I understood that I need help, that this is not, we don't live on an island. That's not only how success doesn't work like that. we can't, like, we need other people, and we'll need other people to be successful, move for the future. It was just this, like, of course, people say that. Like, yes, we understand that, but changes when you're an adult and you have to learn to talk again. And you are now a 3-year-old and you need literally your wife and your brother to help you move from the bed to the bathroom after you're living at home, after you've now been on tubes, right? So that changed the way that I viewed others, once again, leading to it. Also, though, this humility aspect that it's like, I don't know what's going to happen. Do you know how many times I was told, we don't know if you're going to walk again? We don't know if you're going to get out of the hospital. We don't know. The only thing you can do here is you can try. And it hurts to do everything. I was in a massive amount of pain. So it was just, you don't know the end. You got to keep going. You just got to. And you got to have faith and hope that it will turn out in the end, because nothing else matters. And so that changed the way that I communicated. First of all, for my gratitude level for other people, recognizing that I need other people and the responsibility that I have to other people. When investors, they mean a lot to me. And I'm very concerned about, our action with them. And so when I communicate to them, there's no sense of pride where I'm better. I'm an operator. No, 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 not this. I've been doing this for 20 plus years. And no, I need you just like you need me, back and forth. So that's why we think of it a ride along, or investors are our partners. They are. And so that really changes the way that you communicate with them, how you view them, how you see them. And that was a big change as a young man who was 34 and been very successful in life. And viewed it as, I don't have investors, anybody else, and it was just, we did it. And that changes your purpose. That changes all of those things. So
Yeah, I can only imagine. I think humility is the word that's ringing in my ears.
This episode of the Invest Clearly podcast is brought to you by Scale IR. If you're raising capital, you know the hardest part isn't just generating leads, it's turning those leads into committed investors. That's where Scale IR comes in. Scale IR transforms your investor engagement process with their proven solutions that optimize lead qualification, accelerate investor conversations, and drive higher conversions. From seamless CRM integration and intelligent workflows to expert investor qualification specialists who handle your initial discovery calls, Scale IR gives your team freedom to focus on closing deals. If you're ready to scale your investor relations and capital raising effectiveness, visit scaleir.com to learn more and book your strategy call today. Scale IR. Engage smarter, convert faster.
So how also though did that change your perspective on risk? Did it impact your perspective
it
on
did.
risk?
It did change your risk. So once again, I didn't take investors principally because I did not want to risk. I did not want to risk their money. And I didn't want to risk someone that I had to be responsible to. Like, just flat out. Like, I didn't want to have to answer you. I didn't want to have to answer to you. I didn't have to, all of this. I'm like, I don't need it. And after what happened when it came out, when I risked, I viewed, and I was told this by a good friend of mine. And he said, why aren't you taking, let's say capital or anything? I go, I don't want to do anything else. And he goes, so you think that these people are not as smart as you? And I'm like, no, not at all. And he's like, okay, well, you think that these people can't take on risk then? They're not able to, or they're not willing to? I'm like, no, they can do. And he's like, then all you're doing is not giving opportunities to others. And when I thought that way, it was like, oh, okay, once again, we're in this together. We can take risk together. So I viewed risk as a essential, obviously, part, which I had before, but I viewed it as, I don't know what's going to happen and I can't control it. I was fine. 1 minute I was planting trees, huge 40-foot trees in my backyard. The next minute, literally hours later, my wife was pulling me out of a bathtub and my legs wouldn't work. 2 days later, I was put into a coma and on life support at the age of 34. And I was healthy. I mean, I was extraordinarily active. And so how I viewed it, first of all, is there are uncontrollables that no matter what, I can't control. And then there are things within our control. And when I look at risk, those two things are very different. I have intrinsic and extrinsic risk. I need to be prepared for the things that I can't control. And I need to manage risk because I can't control it. All I can do is manage it. So, for a perfect example is, and two, we just look at the reality. I can't affect things. It is what it is. So in 2021, I came out with the self-storage bubble. I said interest rates are going to rise and we're going to create a stagnation in the housing market, which is going to affect storage. Storage is way too high multiples. We refinanced our portfolio because we want long-term loans that don't refinance because I don't know what those risks are going to be. So we got a low rate, even though we still had like 5 years on our portfolio. We just did it. And I took in cash because we needed to have a buffer. And that was, you know, it, what we did with that and how we moved forward was predicated on this fact that I don't know what will happen. This was really driven home too because of 2008, obviously. I owned businesses and storage, had a portfolio through 2008. So I have had major events in my life that not only humble me, but remind me these things that are outside of my control, not only can they happen, they will. Like they will. Recessions are guaranteed, right? And so if we know that, then what do we need to do to manage it and protect ourselves? And so I really changed the way that I viewed on how I take those actions, how we set those up, focusing on intrinsic versus extrinsic value and risk, and how to just make sure long term. I'm a very long term thinker, and that's good and bad in some cases.
Well, yeah, and it actually puts a lot of things you say in perspective because you talk about real estate being treated like a business, not a flip. And so it seems like your orientation has a lot to do with that risk profile. If you're thinking long term, then naturally you're focused on all of those intrinsic things that you can't control. You have to have a plan. So obviously
Long
within
term gives me options. So
right,
I can always take advantage of short term, but if I plan on short term and something happens, then I can run out of options. That's how I think of it. I'm managing risk, giving myself options for things that I don't know. And I'm empowering myself within market cycles to either take advantage or be protected against. And then over that time, I want the decisions to be on me, not the market.
right.
Market forced decisions are very scary. And so you manage risk to not put yourself at, you're not subject to those forced decision making times like interest rates, contracts, refinance sales in periods of time that aren't good, but you have to do it anyways. And
I mean,
so that's what that was a lot of that thinking and constructing from our business model and how we operate.
so like when you're managing assets long term though, and you're managing them like a business, obviously you're going to go through cycles. And we're in an interesting moment in the cycle right now. There's headlines. How do you
Yes.
keep investors aligned and communicate the long term value strategy to them, kind of despite noisy or in the face of noisy
Yep.
headlines or short term returns flattening out or something?
So I think there's a few things. The first thing is the goals and the targets and adjust them, but what you're trying to do and accomplish. Now, when you look at with investors long term, not all of them will have the same viewpoint as you in the market. Ev- and that can be really hard during times like this because some of your investors may have very strong opinions on the market and what you should do that are very different from you. And you have to have hard conversations and be the one that's willing to have very hard conversations with investors. And I have. One investor wanted us to sell some stuff because they had all the stuff they were doing and going on. And I had to tell them, your short term needs are not priority. And I do not make decisions based upon your needs. I have 300 other investors. I don't trump your needs with 300 other people, right? So we are all in this and we have a plan and we need to stick to that. And I think a lot of that needs to be filtered out at the first. And you need to do a really good job communicating the original plan, the original goal. We're long-term hold or we're a short-term. Here's the 5 years. Here's what we're financing. So everybody's on the same page out of the get-go on what the goal is. This was really hard 3, 4 years ago because there was so much money and things were so good. We had investors that didn't even watch our videos. They didn't even read the documents. They just gave us money and they didn't even know what the plan was. And then you're sitting down with them and they're wanting something that we're like, that was never even what? And they're
Wasn't
like,
in the
well, I
plan.
didn't watch it. I didn't read it. And those are hard conversations to have because, first of all, the investors are looking after themselves, which they should. That's not a bad thing. That is what they should be doing. They're watching after their money. They're viewing you as a vehicle. They need to protect it. There's nothing wrong with that at all. So, understanding that if you could take care of those problems out of the gate before you even get started, where you do a right match with the right investor, the right thesis to you, you will take care of 90% of your problems and then be transparent along the journey afterwards. And I think that it's really important to understand you are not a match for everyone. You do not want every investor's money because they have other needs, they have other wants, which your thesis, your investment strategy, your management style doesn't fit. That's okay. That's okay. You need to be very clear then about that up front so you, like getting married, can marry the right person. You
Right.
don't want to get married and 2 years later find out they don't want kids and you want 10.
Right. Yeah, I think it's a really, really important point. It's something I talk to GPs about a lot. It's also something we talk to LPs about a lot. It's like one, like in passive investing isn't really passive in the beginning. You need to make sure that this investment is a good match for you, but also for GPs, like creating alignment up front is really, really important.
Really important.
Your loudest investors are going to be the ones that you failed to create alignment with just because they were willing to write a check,
Yeah.
and I'm sure everyone's got some experience with that. So we don't have a lot more time. So two more questions.
Yeah.
What do you think operators should be doing to maintain trust in this market?
Man, just based upon my failures, uh, and which there are many, um, there were a few things that I think I wasn't transparent about because I didn't want it to look like I was bragging or something like that. Like when the market, especially when it first turned, we had one market in particular that was slam, 60% of rate drop, 60%. We had a new facility open and we were in a fill up mode on one or two of the facilities. Well, I personally covered the expenses of the assets, all property management, everything. We did not charge nothing. It cost us right around $3 million out of our bank account. That's not profit we didn't take. There was no profit. There wasn't profit at the management company, nothing. So we had to fund so that investors, it wouldn't be another negative. So I didn't talk about that at all. I didn't say anything about it because I didn't want it to be like this, oh, look at me or rubbing it in. And I didn't want that, right? I thought that that would be bad. Um, that was dumb because then they don't really either understand the situation or what you're doing. And then there's this difference in understanding. You don't want your LPs to have a different view of the situation than you do. No matter what the situation is, you want to be aligned. And so I think it's like, just get down to brass tacks. Here's what I did. I'm not asking for a thank you. I'm telling you so you're informed, right? And here's what the situation is, and here's what we're doing to change it. I think consistent, clear communication, meaning here's why we communicate what we do, here's the consistency of it, and then not diving into things that aren't relevant that you're doing to try to either show or explain that is confusing. Be direct to the point. Here's what's happening. Here's what we're doing. When you don't know, tell them you don't know and say, this is what we're trying to do. Here are the risks, and this is why we're doing it. And I think, and then just move. Action, action, action. Show by work. explain what you're doing, be transparent, and then work. And even if you don't know what the outcome's going to be.
Yeah, I think that's really good. It is interesting because I think a lot of operators are stepping into. It comes back to that like failure thing. I think too. Like a lot of operators are stepping in, taking really big action to make sure that their LPs are made whole.
Yes.
And
Yep.
that's kind of like, okay, well the deal isn't going well. All right, but like you're stepping in to do something, so it is important. Like you said, just like any relationship, if there's a mismatch between how two people are perceiving it, there's room for kind of
It
discomfort
causes
in that
problem.
communication, right? Exactly. So
And
make
as
it
a
clear.
GP, you're going to get upset because you're
Right.
like,
Right. You know, like,
QEs
I
are
just
telling
took
me
this
no
huge
respect.
action. Yeah. People are upset. Okay. So one thing we're asking LPs and GPs, phrasing this question comes from our CEO, Pat Zingarella, but what part of passive investing or needs to die? Or what misconceptions or elements of this industry need to go away?
So there's a few things. I think on the LP side, this idea that occurred in the greatest bull market that the world has ever seen, where everything went up, occupancy, rents, interest rates went down, that direct investing is an ATM, that the value of your investment is the split, the preferred return, the thing that is not the value of your asset. That isn't the value of the investment. That is what was put on paper if certain things may happen or not. I think LPs need to understand you are investing in a business and an asset. That's what's important. Everything else, all the splits, all that stuff where you're looking at and saying, well, this GP has X split, X return. This one has this. It doesn't mean it'll happen. It doesn't mean that it'll happen. It is only predicated on what you're buying and what you're investing in and how you're doing it, that anything will. So I think on the LP side, it's this idea that, oh, I'm investing passively and this is the investment. Like that formula of returns when they happen, all that needs to die. The next thing on the GP side that I need to die, and I may upset some of your GPs. That's okay. I was shocked at the industry, and there are elements that to me view almost Ponzi scheme like, that we can pay investors out of funds that we raised as distributions and call them returns. I didn't know that was a thing until I started investing. That was crazy to me. And I was shocked how mainstream that is. That I'm going to raise more than I need, and I'm going to pay out distributions out of money that we got from the bank or for investors. I'm going to call that a return. And then I'm going to say my IRR or my cash on cash or whatever it is this. It's not. That's not a return. All you did was took money from someone interest free and gave it back to them and called that a return. I think that is, I hate that part of the business because it is so confusing to investors when they're getting consistent distributions. Then all of a sudden, the GP is like, we're underwater, we have no more money. You gave me a distribution last quarter, and that distribution hasn't changed for 2 years. What are you talking about? Oh, well, none of that came from any
Right.
cash flow. Like I'm very concerned about that because it is so confusing for LPs when they look around, and I hear this constantly from LPs. And they go, I don't understand. And then to value an asset or your actual return, that's that that's confusing because the return that you're getting isn't a return from the asset, but yet we're stating it like it is. I look at this in so many other industries that would be illegal. But when
Yeah.
you're direct investing in real estate, it is not only okay, the vast majority of people do it. And I dislike that greatly.
It's a good word. We can end it there. This has been awesome, by the way. Thank you for taking the time. I think our
Thanks for
listeners
having me on.
really value it. And just want to leave you with, if people want to learn more about you, Cedar Creek, self-storage income, where should they go?
Cedar Creek Capital. You can find me anywhere online. AJ Osborne, self-storage. You can go. If you want to learn more about the industry, everything, you can go, to Instagram or our podcast, the largest one in the industry, self-storage income. Check that out. Investing with us, Cedar Creek Capital. Check out Cedar Creek Capital, AJ Osborne, and contact our team.
Awesome. Thanks, AJ. Appreciate it.
Thanks, man.
Thanks for listening to the Invest Clearly podcast. To find verified investor reviews or to claim your GP profile, please visit investclearly.com. If you enjoyed this episode, please remember to like, subscribe, and leave a review, because that's how other people find the show. Till next time, invest clearly.